Okay, in this video today, we're going to dive into this Tesla stock split, 3-for-1. I've been seeing a lot of the comments and a lot of, you look on Weeple or the feeds, where a lot of people are sometimes saying at the current state where we are with the market and the recession that this might not go the same way. I'm going to go ahead and disagree because it's Tesla. Um, this is not to me just a car company. Tesla, yes, is what I think I read some notes. 61% of U.S. industry for BEV for electric vehicles. 26% of the global industry. That's a big number. Hard to compete against that. They've already got a head start over 10 years or so here. And with so many people at this current state, they're being nervous about this next stock split. And the reason I'm pretty much going against that is stock splits aren't to take the money and diverse capital, and now you have more shares with less money. Usually people or a CEO, there's a trajectory, there's a plan for it. So they're going to do this, and it's usually to open up and to put money towards other, as you say, adventures, plans that's only going to grow them and make you as investors or me more money. I'm very long-term Tesla, which not a financial advisor, just research this a lot. But if you look at it, the last time they did this stock split, if we take a look, I think I pulled it up here. I drew a line for you guys here. It's they were talking about it. Here's where all the news came in, and look what happened afterwards. This was after the first stock split, and then it just kept going. Now, mind you, this was during a pandemic. I do believe a lot of it has to play that people got more money put in their pockets, but whatever. Still, this is a great company. Like I said, it's not just in cars. Tesla is also in solar industry. Look how many companies have branched off from Elon. This Twitter deal, he just keeps going. I'm not sure how long he can stick with this or stick with Tesla, but just in general, while he's here, he's doing a great job. I mean, the last time they split like this, the shares rose like that, 81%. I'm starting to see that now. If you guys look into it, we can go here, more current date into where we are now. It was announced pretty far back and around this area, and look what happened. Same thing. Now this also involves the Fed and Jay Powell, which is what he needs to do, rate hikes to attack inflation. But here we go. We have the Fed minutes actually, and I'm going to miss it in like 10 minutes. But this is also, even going against that, which a lot of people are saying is hawkish, we're still running up. And it seems like going against the market is, people should have really, that's a great buying opportunity. Last time that was visited was, look at that, almost a year ago, yeah. So in general, like I said, I wouldn't, not advice, but where people are getting so nervous about this and thinking that they're doing this because, I'll be losing money in some sort of way, you'd be gaining share. No, you're not losing money, you're not losing share. It's the same thing. They're usually just, it's turning into market cap, to capital, raise capital, to, it's advancing your cash flow to use it towards more projects, or maybe he needs it, which I think he already took out or sold some shares for Twitter, but there's a plan for this stuff. So if you're long term, this is a good thing for a long term investor. If anything, you could sell as it goes higher. Because I feel like this will increase, don't mark my words, but I feel like it will go up. And you could get back in. I do believe I heard dividends that are in plan as well. So you could just sit on this, wait till the stock split, and then put in more money. You'll have I think this will put the share price at 200 in that range. So I mean, it's a good time no matter what to get in. And like I said, not advice, but I've watched this thing over years here, and what he's done is just it's remarkable. With that being said, like, if a lot of people are nervous about what's happening with Jay Powell and being hawkish today, we can also see that, which if they are hawkish and they keep it at 75-point rate hike today, fine. We probably needed it anyway. We had an 8.5 result. Inflation, which is down, that's fine. but I don't think it's going to mess with the share price here of Tesla, honestly. And I tried to explain to you before with the minutes and what their plan is and what they're planning to do. And if you look, I can try by doing a little drawing here on how to explain where they want to match the rate hike and recession and job growth. Like, imagine this being like a golf club, and you'd have a little ball here, and what you want to do is stay in line together. That's a horrible golf club. Okay, there we go. You want that follow through swing. You want the golf club and the ball right there aligned with each other. Imagine that being the economy and the job growth. Well, right now, it's more like my golf club's here, and that's where the economy is, and this is where the job growth is back here. So if you swing, you're gonna miss. This is not in line with each other. So what they're planning to do is to add this rate hike here to get the inflation lower than 8.5, so we can get back to the plan mark of 2%, because that's their plan, to get back to that 2% stable
mark.
economy. So just take that into consideration. Comment below on what you think could happen. But I honestly, in my plan here, and always have a plan before these comes up, and just in general with your portfolio. But I really think this thing could, go higher, take a little dip, wait till all this chaos kind of folds, and then I do think, I don't think we're going to see the 81% climb like we did 2 years ago, but with how many things are advancing, if you look at the indices and the forecast for 2023, it's expected or predicted that the supplies for these EV cars and taking orders again, same with solar and all the other products they're doing, this Toyota thing will be behind us by then. It's a whole year away, but in the future, this plan, all this will be out, and I think a lot of that will be out of the way to where they can get back on track, and we're still beating quarterly earning numbers, even with what's going on in shortages. So just in general, I would take this, like, as the comments I've seen, don't take this as, a bad thing to do a stock split. And in history, you do have some companies here and there that have done a stock split, and it's like, oh, it didn't really work. But with this one, it's worked. I think it's going to work again. I'm not going to say the numbers or when you should invest. That's on you. Like I said, I just researched this stuff a lot, and I do think you should put money in somewhere. And this is a long-term company, for sure. So like I said, comment below on what you think, or where you think the numbers will be at, or how we're going to be. But we'll see you on the next one.